So we're here today at the beginning of Level 2 lockdown. I wanted to tell you about one of the real success stories that we've had in our portfolios in recent times. The Scottish Mortgage Trust was launched in 1909. It's based in Edinburgh. These days not so much about Scotland or about mortgages. It is a global equities manager. They're a global stock picker. They've got a very low fee, which is 0.4%, and they manage around about $10 billion. Of that, obviously, we have a very small proportion, which is one of the great benefits of being able to pull your money in with an investment manager, is that you get that economies of scale with those large companies. They're a stock picker. They focus on companies with strong growth prospects. They've got a very, very long time horizon, so they pride themselves in having a lot of patience. The managers, they see themselves as owners of companies, which I'll come to in a minute, rather than renters of the stock. So they don't try and buy things and sell them quickly. They want to be in there for a very, very long term. In terms of their portfolio, they've got three investment themes that they're currently aiming for. The speed of technological advances, which is obviously something which has become a whole lot more pertinent in recent times. How they can disrupt established businesses within a market, and also the re-emergence of China as an economic superpower within their portfolios. They're very high conviction, so they hold large positions in only a few companies. They've got about 40 stocks in that $10 billion. Within their top 10, they've got some very large positions. They've got American giants, Amazon, Tesla, Netflix, Google, which we all know and have all been booming over the last month or so with what's happening within their businesses. The Chinese giants, Alibaba and Tencent, both of those are online retailers. They've been booming over the last 6 weeks too. Then they've got some large positions in some smaller companies that have still also been doing very well in their top 10. Spotify, Zoom. They've also got some unlisted companies. Now, unlisted means is that you and I can't go and buy them on a stock market, but a company like Scottish Mortgage Trust can go and put in a substantial amount of money into them. Spotify was a good example of that. They had $500 million invested in Spotify when they listed on the stock market, and was able to sell out a lot of that in terms of helping them list. Delivery Hero is a very, very large company in Europe, which is like Uber Eats, where they deliver food. They have their own restaurants and they deliver food as well. HelloFresh, some of you will be familiar with that here in New Zealand, where they deliver boxes of food to people's doorsteps. And also TransferWise, which is one you probably haven't heard of a lot at the moment. Listen out for that one. TransferWise is an international credit card which has very low fees on it. And if you're travelling overseas, then I would definitely recommend that you go and have a look. I've gone and got one myself. The fees on it are exceptionally low, and really is a very good, just like a Visa or a MasterCard, which you can use overseas in different places. So of those top 10 companies, 9 of them are actually been magnificently positioned for this pandemic, which has been complete luck, but also the fact that you would also say it's magnificent management on their behalf. For us, our exposure, we have owned the Scottish Mortgage Trust since 2017, about April. It's gone up, by the time the crash started in February, it had gone up for us about 100% over those 3 years. That return had largely been driven by Amazon, which is about 9% of the portfolio, up 167%, which is substantial. They pulled back a little bit in 2018. Same with Tesla. They pulled back a bit in 2019, but it makes up about 10% of the portfolio. Then the last 4 months before we sold out in February, the majority of the portfolio in February, it was up 230% in 4 months, which is pretty phenomenal. For us, based on economic data, based on where the global economy was in that cycle, based on the fact that we thought we sold a lot of our growth stocks, didn't we, which everyone knows, is, we've well documented that. We sold a lot of our Scottish mortgage after being up 100%. Market obviously went down 30%, the fastest 30% fall in history, 22 days. And then we started to buy back into the Scottish Mortgage Trust again. It's now gone up about 20% over the last sort of 6 weeks. And we've actually started to be able to sell it again to make some profits. We usually wouldn't buy and sell things as quickly as this, but when we're seeing these large moves and companies doing as well as what Scottish Mortgage have, we've really acted on them over this time. We still see ourselves being a long-term holder, albeit at the moment we only have about 3% in the portfolio, but we're looking to be able to buy in again once we get some better value in the coming weeks or months.